In addition to accumulating reserves, China has begun to develop its own financial infrastructure specifically designed to support international transactions in its own currency. The Cross-Border Interbank Payment System, CIPS, allows banks to settle transactions using the Chinese yuan. Although this network remains considerably smaller than the long-established systems predominantly used by Western financial institutions, it undeniably represents a concerted effort to expand the international role of China's currency. China has also actively encouraged certain trading partners to conduct business using local currencies rather than relying exclusively on the dollar. In some instances, trade between China and Russia now largely occurs in yuan and rubles. There have even been discussions about settling certain energy transactions using the yuan. These developments, while still relatively limited in scale compared with the immense volume of global trade conducted in dollars, nonetheless illustrate a gradual experimentation with new financial arrangements. Despite these emerging changes, the dollar continues to utterly dominate international finance. The vast majority of global reserves remain denominated in dollars. American financial markets are unequivocally the largest and most liquid in the world. Investors often view U.S. government bonds as among the safest assets available globally. The United States also benefits significantly from an extensive network of alliances and institutions that reinforce its formidable economic influence. For these compelling reasons, any transformative shift in the global financial system would likely unfold slowly and incrementally, rather than suddenly or abruptly. Indeed, reserve currencies tend to retain their powerful influence long after underlying economic conditions begin to change. Britain's pound sterling, for example, continued to be widely used even after the United States had economically surpassed Britain. The country has dramatically transformed from a largely agrarian economy into a colossal global manufacturing powerhouse. Chinese factories now produce a vast share of the world's electronics, machinery, textiles, and industrial components. As China's economy has grown exponentially, its influence over global trade networks has expanded commensurately. One key aspect of China's strategy has involved meticulously building extensive economic partnerships with developing nations. Through ambitious infrastructure programs such as the Belt and Road Initiative, China has financed projects across Asia, Africa, Latin America, and even parts of Europe. These colossal projects encompass railways, highways, ports, pipelines, and power plants. For many recipient countries, Chinese financing offers a vital opportunity to construct essential infrastructure that might otherwise be prohibitively difficult to fund. Simultaneously, these projects profoundly strengthen the economic ties between China and the regions receiving investment. China has also systematically accumulated substantial foreign exchange reserves, including enormous holdings of United States government bonds. This phenomenon powerfully reflects the deep interdependence that exists between the two economies. American consumers purchase vast quantities of goods produced in Chinese factories, while China, in turn, invests a significant portion of its export earnings into global financial markets. Another notable trend has been China's gradual but consistent increase in gold reserves. Central banks around the world have, in recent years, increased their gold purchases as part of broader efforts to diversify their reserve assets. Gold holds a unique and enduring position in the global financial system because it exists entirely outside the control of any single country. It cannot be created through monetary policy and does not depend on any government's specific financial system. American banks systematically expanded their international operations, extending loans and offering sophisticated financial services to companies and governments worldwide. Investors increasingly looked to Wall Street for capital and specialized financial expertise. While London undeniably remained a powerful financial hub, New York had by now become a formidable rival. Then came the Second World War, which placed an enormous and unsustainable financial pressure on Britain. Maintaining its vast empire while simultaneously fighting a global war demanded colossal amounts of money and resources. Britain became heavily reliant on American support through vital programs such as Lend-Lease. By the early 1940s, the financial relationship between the two countries had dramatically reversed. The United States had become the unequivocally dominant economic power. Thus, When delegates gathered at Bretton Woods in 1944, the transition was essentially complete. The conference merely formalized what had already become an undeniable reality. The United States would lead the new global financial system. For many decades afterward, the dollar served as the central pillar of international finance. Even when the gold convertibility element of the Bretton Woods system was ultimately abandoned in the early 1970s, the dollar steadfastly maintained its dominance because global markets had already built their intricate systems around it. Oil, commodities, and international trade contracts were, and largely still are, commonly priced in dollars. Governments worldwide continued to hold large quantities of dollars as essential reserves. Financial institutions conducted the majority of cross-border transactions using the American currency. Today, some astute analysts believe that another long-term shift may be gradually unfolding. Over the past 4 decades, China has experienced one of the most rapid and comprehensive economic expansions in modern history. However, by the early 1900s, the economic center of gravity was unmistakably beginning to shift. The United States had experienced incredibly rapid industrial growth during the late 19th century. American factories produced vast quantities of steel, machinery, and consumer goods. The country was blessed with enormous natural resources and a large, dynamic internal market. By the time the First World War erupted in 1914, the United States had already ascended to become one of the largest economies in the world. The war dramatically accelerated this transformation. European countries desperately required massive quantities of weapons, food, and industrial supplies to sustain their grueling military efforts. A significant proportion of that vital production originated from American factories. Britain and France, in particular, borrowed heavily from American banks to finance these essential imports. By the time the war concluded in 1918, the United States had fundamentally transitioned from being a debtor nation to becoming one of the world's largest creditors. European governments now owed billions of dollars to American lenders. Another crucial component of financial leadership involved gold reserves. Throughout the early 20th century, international monetary systems were inextricably linked to gold. Countries that held large quantities of gold were perceived as inherently financially stable because their currencies could be robustly backed by these physical assets. During the interwar period, the United States steadily accumulated gold reserves from across the globe. By the 1940s, the vast majority of global gold was securely stored in American vaults. This unprecedented concentration of gold profoundly reinforced the credibility of the dollar and significantly strengthened the United States' capacity to shape the global financial system. Concurrently, New York was rapidly emerging as a major financial center. Bretton Woods, therefore, was not the genesis of this transition. Rather, it was the definitive moment when a long-evolving process finally became officially formalized. Indeed, at the very beginning of the 20th century, the undisputed center of global finance was not New York, it was London. The vast British Empire extended across multiple continents, controlling immense territories that spanned the entire globe. British shipping networks absolutely dominated international trade routes, and London served as the world's preeminent financial hub. The pound sterling was the currency most extensively used in international commerce. Banks in London meticulously handled transactions that involved countries thousands of miles away from Britain itself. A merchant in Asia trading with a counterpart in South America, for instance, might complete the entire transaction through a British bank, using pounds as the settlement currency. London had effectively become the indispensable clearinghouse for global commerce. This unique position bestowed extraordinary advantages upon Britain. When the world relies on your currency as its standard, global demand for that currency remains consistently high. Governments hold it in their vital reserves. Businesses borrow and lend in it. Crucial trade contracts are meticulously written in it. Financial institutions around the world meticulously build their entire systems around it. Economists frequently describe this phenomenon as the exorbitant privilege of issuing the global reserve currency. It empowers a country to finance large-scale projects more easily, borrow at significantly lower interest rates, and exert influence over international markets in subtle but profoundly powerful ways. Britain's financial dominance was instrumental in sustaining its extensive geopolitical influence throughout the 19th century and well into the early 20th. Crucially, while Europe and Asia had suffered catastrophic devastation from relentless bombing campaigns and brutal ground invasions, the American mainland had largely remained untouched by the ravages of destruction. Britain, though victorious, had expended colossal resources simply to survive the war. France was grappling with the profound challenge of recovery from years of occupation. Germany and Japan faced the grim reality of catastrophic defeat. Meanwhile, the Soviet Union had endured unimaginable losses, both in critical infrastructure and human life. In stark contrast, the United States emerged from the conflict not weakened, but remarkably stronger than when it had entered. In such an unbalanced environment, the outcome of the Bretton Woods negotiations became almost predetermined. The delegates reached a consensus to construct a new financial system fundamentally centered around the American dollar. Other national currencies would be pegged to the dollar, and the dollar itself would be convertible to gold at a fixed price. The new institutions established during the conference, notably the International Monetary Fund and the World Bank, were intended to stabilize exchange rates, offer financial assistance to countries facing crises, and support post-war reconstruction efforts. In practical terms, however, the very structure of this system effectively ensured that the United States would sit firmly at the epicenter of global finance. The dollar swiftly became the currency most widely used in international trade, global banking, and governmental reserves. This transformative moment effectively marked the dawn of what many historians now refer to as the American financial century. Yet, this profound shift in financial leadership did not suddenly materialize in 1944. Its origins stretched back decades earlier. In July 1944, as the Second World War still raged across Europe and the Pacific, representatives from 44 nations convened at a tranquil mountain resort in Bretton Woods, New Hampshire. While the fierce battles had not yet concluded, the Allied powers had already begun to foresee their imminent victory. With that victory, however, they recognized a far more intricate and daunting challenge would emerge: the monumental task of reconstructing the global economic system. The preceding years of conflict had utterly devastated cities, industries, and financial institutions across vast swathes of the world. Entire national economies had crumbled under the immense and sustained strain of the war. Thus, the delegates gathering in Bretton Woods were not merely planning the recovery of their individual nations. Their crucial mission was to determine how the entire global financial architecture would function once the war was finally over. Fundamental questions loomed large. Who would establish the fundamental rules of international trade? Which country's currency would serve as the anchor for the global monetary system? And ultimately, which nation would wield the greatest influence over the economic framework destined to shape the better part of the coming century? The United States arrived at that pivotal conference with an undeniable advantage, one that was almost impossible for any other nation to rival. By the concluding years of the war, the U.S. controlled approximately 70% of the world's gold reserves. American factories were churning out industrial goods at a rate unprecedented in human history. The nation's shipyards, aircraft factories, steel mills, and automobile plants had been ingeniously repurposed and transformed into the most powerful manufacturing engine the world had ever seen. Financial systems typically evolve gradually as new patterns of trade and investment slowly emerge and solidify. Looking ahead, the world may well move towards a more diversified monetary landscape, one in which multiple major currencies share influence. The dollar could potentially remain the leading currency, whilst the euro, the yuan, and others play increasingly larger and more significant roles in regional trade and international finance. What history unequivocally demonstrates is that financial leadership ultimately reflects deeper economic and political realities. The system meticulously created at Bretton Woods undeniably reflected the overwhelming economic strength of the United States at that specific moment in history. Whether that structure remains largely intact or gradually evolves into something new will ultimately depend on how global power continues to shift and rebalance in the decades ahead. For now, the dollar remains firmly at the very center of the global financial system. But as nations actively explore alternative financial networks, diversify their critical reserves, and develop new economic partnerships, the landscape of international finance continues its inexorable evolution. And just as the far-sighted delegates in Bretton Woods once shaped the economic order of the 20th century, the crucial decisions made by governments, central banks, and financial institutions in the coming decades may quietly but profoundly determine how the next chapter of the global monetary system will unfold.